Hello and welcome to UC San Diego and JFIT, the Japan Forum for Innovation and Technology. We are a part of UC San Diego called GPS, the School of Global Policy and Strategy. And if you would like more information about our school and our various degree program, including our Masters of International Affairs with a Japan specialization, please check us out as gps.ucsd.edu. And likewise, you can learn more about JFIT, our Japan Center, at jfit.ucsd.edu. At JFIT, we have a Japan series and a newsletter, so you will find more information on our website. And just so that you know, we have this weekly seminar series that is held every Tuesday at 4:30. Today, of course, we'll talk about business reinvention. Next week, we'll have Christina Davis from Harvard and Megumi Naoi from here talk about trade and Japan and whether there's still hope. We'll then move on to religion, culture, and gender. And of course, in July, on the occasion of the Olympics that are not happening this July, we will discuss the Olympics. Today, our topic is the business reinvention of Japan, and I am excited to have Steph Haggard with me. And I will actually stop here because you've all seen the flyer and bring Steph on. Steph is the Lawrence and Sally Krauss Professor of Korea Pacific Studies at GPS. He's also the director of our Korea Pacific program. And of course, he's very famous for his blogs on North Korea, his books on everything from way back when, the newly industrializing economies of Asia, to more recently, the developmental state and other issues like that. Steph and I have been colleagues for 25 years, and I have to tell you, Steph, it's been a just absolute joyride to have you, down the hallway and be able to pick your brain on so many occasions. And I am just tickled pink that you're joining me today for this show to talk about what's going on with Japanese business. Thank you.
Yeah. So actually, Ulrike is being a little self-effacing because what we're going to do today is we're actually going to talk about her new book, The Business Reinvention of Japan, which is also just a real pleasure to read. And so I thought I would lead and kind of moderate a discussion between the two of us. And then as questions come in, we'll take them. So let me just say something about a protocol here. If you do have a question, put it into the Q&A, and I'll try to moderate them either as they come up or we'll try to leave some time at the end to handle them. So I think I'm actually going to hold this up because it's wonderful to see things actually appear in print, and congratulations on this coming out. I think it's going to be a success. Let me start by asking a personal question, though, that has to do with how you got to this book. In 2008, you wrote a book called Choose and Focus. And the bottom line of that book, as I read it, was that Japanese companies came out of the lost decade of the 90s really having to reinvent themselves. And they did so in part by, as the title suggests, choosing and focusing. And in some ways, this book is also looking at a somewhat difficult decade anchored by the global financial crisis, and then a period of middling growth, let's say. And you're looking now about another phase of reinvention. What triggered the core insight of this book about this particular strategy?
Well, yeah, that's in a way, this new book is a Choose and Focus version 2.0. So what happened was that the Choose and Focus, the first book, came out in 2008, just before the global financial crisis. And so a lot of people say, well, you're too positive on all of Japan. What you're describing is a group of Japanese companies. And wouldn't it be cool to know more about the Japanese companies that are really profitable? So the anti-story of Japan. And so I put together a data set and I wrote a paper called Show Me the Money. And it was about Japan's most profitable companies. And so I had my 200 companies. I went to talk to the CEOs and so forth, and wrote a paper about the 7 Ps of these CEOs and how they're doing this and that and the other thing. And then I realized that these companies had one thing in common. None of them made consumer end products. They were all, so new Japan's companies were all feeding into the global supply chain, especially in Asia, especially in electronics. And then somebody at the Asia Development Bank wrote a paper that pulled apart the iPhone. And they looked at who actually created the value added in the manufacturing of the iPhone. And they found that 34% of the actual input parts of the iPhone came from Japan, followed by Germany, followed by South Korea, and that Chinese assemblers basically accounted for something like 3.6%. And interestingly, actually, somebody took apart the Huawei phone of 2019, and it's still basically that breakdown.
Right.
That is to say, there are these parts that are made in Japan. They are often very deep technology, chemical parts or connectors or things like that. And then they go around Asia and end up in products that we use every day. But because the Japanese companies have relinquished the consumer market and they're now making these critical input parts, we don't know about it anymore. Right. And so when you look at your screen right now, you're most likely looking at a Japanese chemical, but you wouldn't know because there's no sticker saying Japan inside.
Right. So let me just back up a little bit before we get more into the weeds, and let me pose a kind of skeptical question so our audience doesn't mistake this for just a love fest. The message of the book, the prime message of the book, is basically that Japan is being underestimated. And by the way, I have a number of colleagues on the security side who also make that point about the Japanese military, that there's a very capable force. This is the third largest economy and so on, and you make a lot of those points. But why shouldn't we be looking at more traditional metrics? And let me reel off the standard troika of more negative news on Japan. First of all, growth. Real GDP growth since 2010, where there was a big rebound from the crisis, has been very sluggish. I don't think it's topped 2% for more than a couple of years. The demographic picture is frightening. Basically, Japanese population has peaked. It's been several years since it's peaked. It's definitely on the down. And public debt is very high, though I suspect that the rest of the world is going to catch up with Japan in the middle of COVID. But why are you saying that Japan is underestimated at the same time that it's had this sluggish overall economic performance and seems to face these very daunting challenges?
So when I give a talk about this, I actually start with this, right? There's this whole list: the aging society, the regions, the productivity, doubts on innovation, and so forth. And all of these are true, and there are lots of analyses on the debt and so forth. What those books and what that can't explain is how Japan is still the world's third largest economy, with a population the size of, or the working population, a workforce, the size of China's 3 largest cities, right? And so there's something going on the innovation side and on the manufacturing side and the new digital manufacturing side that we are just not aware of. And so Japan is the 3rd largest economy. There's a lot of activity. There's a lot of production, innovation going on, and we just should look at it. What we've been doing for the last 20 years is we've been looking at the companies in Japan that used to be great and are no longer, right? So Sony or whatever main name you may remember from 30 years ago, Toshiba or something. But looking only at those companies is like looking at Sears or Chrysler and saying, well, America is clearly not doing well. But there are these other companies in Japan that have risen to the front. Now, the economic growth question is an interesting one. And in fact, I make an argument in the book that is actually something that Japan has traded in for social stability. That economic growth per se is not Japan's goal number 1 anymore. It's important. It's very important. But there are other ways to measure, actually. So for instance, per capita GDP growth in Japan is rising because of the aging or the shrinking population.
Yeah, and labor markets are very tight. Yeah.
The labor markets are super tight. Japan's unemployment rate, even today, is like 2%. And so, there are 1.4 open positions per job applicant. And so, so economic growth in and of itself used to be a very important, sort of goal for Japan when it was catching up with the United States. But now that Japan is an affluent society, it's important, but there are things that are more important, including social stability and societal cohesion. And so laying off people for the purpose of increasing profitability or closing companies and moving them elsewhere for the single purpose of creating growth, it's not really actually something that's that important.
Yeah.
And it's impossible to imagine this for the United States, but Japan, in a way, Japan can afford this.
Yeah, well, I think your point about metrics is interesting. What do we value? Is growth more important than something else, like social stability or equity? Before we drill down into this aggregate niche strategy in more detail, I wanted to ask you about the cultural frame of the book. This is another thing I found quite interesting. Culture is not exactly the topic that political scientists and social scientists are running to these days, though they probably should. But you frame this in terms of differences between tight and loose societies, which you then carry into the company, and how companies' operations are structured very much by this tight, loose distinction. Can you say a few words about that, and then we'll get into the details of the niche strategy?
Yeah, so I need to understand, we need to better understand why Japanese companies are reinventing in the way they are and why CEOs are doing what they're doing. And in order to understand that, we need to understand the setting in which they are bringing about this reinvention. And as you just said, I mean, culture used to be sort of a dangerous territory 30 years ago, because it had been used in very simplistic ways and, sort of associated with, some innate characteristics. And happily, over the last 20 years, research has made great advances. As you know, the economists have realized that behavioral economics is a very important way of kind of trying to figure out why people have changing preferences and that sort of thing. So tight loose theory is a new theory that we use in international business to understand why countries differ. And basically, it's based on a research by Michelle Gelfand, who will actually be my guest on this webinar on June 23rd. And Michelle and her team did a study of 33 countries, and the survey is very carefully done, where they show that countries differ in terms of the agreement on the social norms of the norms of behavior, what is okay to do in a given situation, and also the intensity with which they enforce this. So if you were to show up to school tomorrow with green hair, and I would look at you and I would say, oh, Steph, that's cute.
We actually have colleagues who have done that.
Yeah, well, you should try, right? We do actually. But if you did that in Japan, people would get seriously worried about you. Steph, okay, what's going on with him? And so it's just not done. And so there are things that are just not done in certain situations. And so Japanese office environment, the work environment, are very much still process oriented. There's a certain way of doing things, and you have to always be polite, and you have to kind of make sure that you take everybody with you and don't rock the boat and don't be an inconvenience. And there are all these preferences, and it's not good or bad, so there are costs and benefits to tight and to loose. So California is one of the loosest places in the world, right? And it comes with some great advantages, like Silicon Valley and San Diego innovation ecosystems and a lot of activity around that. But it also comes at the cost of having, less of a structured place. And Japan, the Japanese preference is to not have a lot of uncertainty and to have a process for everything and follow this process. And so ironically, what that means is that if you're a CEO of a Japanese company and you want to bring about change, you have to do it in a very methodical way, formulaically. You have to set up a pattern. So for instance, when Japan started to change the dress code, it used to be, of course, coat and tie, the whole thing, right? And so the tie is gone and the coat is gone in the summer. But when they started loosening the dress code at the office, they actually had HR training sessions on what kind of clothes would be okay to wear instead of a suit. Right. And so as Japan is moving from incremental innovation and making the ever better radio set to creating deep technology innovation and making great inroads into, the technology frontier, they have to change the way they're innovating. They have to change corporate cultures toward more break it, fix it, be tolerant of mistakes sort of setting. And that is the reason why this reinvention has taken a whole generation. It's taken a generation to change the workforce so that everybody could get on with it. And then the advantage, of course, and this is the old adage about Japanese business, once a decision is made, everybody is on full speed ahead. Right? And so there's this image of the cargo ship and how long it takes to turn a cargo ship around. And in the Japanese setting, it takes forever. But once the cargo ship is ready to go, it's full throttle ahead.
Yeah. Yeah, I think that's interesting because it doesn't sound like the tight corporate culture would be supportive of innovation, but in fact, you show the way in which it can support it. Let's actually turn next to the aggregate niche strategy, which is really the centerpiece of the book. And let me just give you my reaction. I was really struck by some of the sectoral examples you use, because when Americans think about innovation, we either think about particular products, say the iPhone, or we think about these very disruptive business strategies like the platform companies that have played such an outsized role in the valuation of the US stock market. But Ulrike, when you talk in your book, you make reference to sectors like chemicals. And I was scratching my head. I mean, yeah, okay, this is an important process industry, but chemicals as a highlight of innovation, or glass or steel. And one of my favorites is auto parts, which we think of something that you outsource to middle income countries in Southeast Asia or Mexico. And yet you're saying that this niche strategy is in fact focused to no small measure on these intermediate inputs and some of these upstream segments. Can you unpack this aggregate niche strategy a little bit more? Because it's really the centerpiece of the book.
Yeah, so what I observed, what happened is that the Japanese companies, of course, used to own our living room, it's a Sony, and they had all of these consumer end products. And about 20 years ago, the South Korean companies took the electronics away from the Japanese. And then came China. China became the factory of Asia. And the Japanese companies at first were in denial and they didn't know what to do, but eventually they woke up to the realization that the only way to compete was to exit the oven, the toaster oven and the blow dryer and the washer dryer, and get out of consumer end products because there was no margin there. And instead move up into, what's called the smile curve. Stan Shea, the CEO of Acer, talked about how, at the bottom of the smiley is the assemblers and there's no money there. And so Japan had to kind of move up on either end of the smile curve. And they, because manufacturing is still, of course, what Japan does best, these companies decided that they would move up into the midstream and then upstream advanced materials that go into the products that we now buy, right? And so the reason that your screen shows a beautiful black and a nice sort of contrast is that there's a polarizer film in there and a brightness film that are made and of the highest quality, and they're made in Japan. And the Japanese companies, as you just mentioned, chemical companies, combined to something like 80% world market share in fine chemicals for electronics. And so unless you're looking at a really, really poor screen, the probability, the chances are that there is a part in there in your screen that's from Japan. And that is chemicals. And Japan, of course, has like 40 years of experience and tacit knowledge and handed down sort of production processes and capabilities that that the other countries in Asia cannot copy. And the Japanese companies are not standing still, so they're trying to get better and better and better, and trying to stay ahead of their competitors. And so that means they have to go into areas that are difficult to imitate and difficult to make. And so what we see is that Japanese companies occupy sort of the very high end of advanced materials, advanced components, and advanced parts that then go into intermediate products that are made in Korea or Taiwan, like semiconductors, that are then shipped to China, where they end up in the car.
Right. Let me, I'm going to circle back around to some of the earlier questions, but there's one question that's been posed that I think is apropos here. And it has to do with who the companies are who are affecting this aggregate niche strategy. You mentioned some that basically have long traditions of being in manufacturing and process engineering, which has been central to the Japanese model. I think Japan still has probably the highest share of manufacturing in GDP of any OECD country, or one of the highest. But are these smaller firms, larger firms, incumbents, new firms? Who are we talking about?
So that's a great question.
And small in particular, I think.
Well, so the aggregate niche, let me just say a little bit more about the aggregate niche. So when I say niche, what we're talking about with these components and these chemicals are somewhat smaller product input markets, like $5 billion global market, and the Japanese companies might combine to 70% of that market. And they're about, so there's some research, they're about, somebody looked at 900 different product categories, and there are 500 categories where Japanese companies dominate this niche. And the companies, some of them are small and, kind of that's the only thing they do, but most of the companies that compete there are the large, big name companies that you used to know, whether that's Hitachi or Mitsubishi Electric or JSR, Japan Synthetic Rubber, which is a huge, large conglomerate that makes a lot of different things, including chemicals that go into semiconductors. So it's not as if this is like sort of a hidden champion where there's these tiny little places. No, these are large companies, and some of them play in many of these niches. So that's aggregate. So they're just not just one product players. They do this, and then they do this, and then they do this. And so this is not just some sort of small company story. This is the new competitive thrust of Japan's largest firms.
Yeah, in fact, one of the commenters here, Ed Dong, is mentioning Panasonic as an example that isn't really a consumer electronics company anymore, but an energy company doing batteries, for example, and a variety of other products.
Yeah, so Panasonic makes the Tesla battery. They're a big player in connectivity, and they're still struggling and getting out of the toaster oven sort of segment, but that's no longer their core business. They are now a completely different company. This is very
so Jun asks a question which is also related here. Obviously there's no one model for achieving economic growth. We expect countries to specialize along lines that are given not only by endowments, but by these kind of histories we're talking about. But let me pose a question that someone else has asked about the service sector here. Is Japan disadvantaged with respect to services? Is that a drag on overall growth? Does the niche strategy have a service component? Because for American firms, the blending of services and provision of hardware has really been central to the success of a number of firms.
Yeah, so that is a really great question. So, so there are two aspects or two parts to the answer. The first is, what do we talk about when we talk about services? And second, what is the connection to this? So it has been pointed out, and actually in an earlier show, we had Robbie Feldman here, we talked about how productivity growth is so low and the service sector is so limited in its contribution to growth. When we talk about Japanese service sector, we have to divide between the really very efficient places, whether that's the supermarkets or Rakuten or the telecommunications companies, and on the other side, the mom and pop stores that are, or the tatami maker, or these sort of small restaurants that are often there in ways where we just say, well, how does this work? What's the business model here? And that's a part of the larger Japanese story about the societal stability and so forth. So there are lots of government policies to keep those places alive. We should not look at those. If we only look at the competitive service sector, the productivity growth is pretty high and the advances are amazing. And it's a very important segment of this for two reasons. One is it's already pretty good if you think about SoftBank or Rakuten or places like that. And second, it will become even stronger with the shift to the digital transformation. So for example, one of the big cases in my book is Hitachi. Hitachi used to be a company that makes everything from Shinkansen and power plants and nuclear power plants to vacuum cleaners and then also some imports parts like Hitachi Chemicals, Hitachi Medical. So it was like this huge conglomerate. And Hitachi has decided that its future will be in an SA service company. So it has greatly pushed Hitachi Vantara, which is the data system business, and it has systematically exited a lot of the former, and it actually sold off some of the crown jewels like Hitachi Chemical, Hitachi Medical are no longer part of Hitachi and are in the process of being pulled out. On the train side, Hitachi will do what the car makers are going to do. They will no longer sell a train to JR, which is Japan Railways. Rather, they will offer transportation as a service and keep the train and then charge JR a monthly subscription for using the trains. And that will turn Hitachi into one of the biggest data players in Japan. And you might say, well, hasn't Siemens done that already? Or isn't this what GE is trying to do? Yeah, sure enough. So Japan is slow. There's no doubt about that. But slow doesn't mean stagnant, right? And so very systematically, Hitachi is completely repositioning itself as a data player. Mm-hmm. And so I could tell you the same story for Mitsubishi Electric, which will be a huge player in edge computing. It's already positioned to do so. And so this goes on. And some companies are slow and they might fall by the wayside. But if we include data and that sort of as a service into the economy,
oh, absolutely, good.
Then Toyota is going to be a mobility as a service player, and not only in Japan but in Southeast Asia and in the world. So this is going to be the new Japan. Yeah.
Well, this opens up, larger questions of interest to my constituency as well as yours, which is the Northeast Asian political economy more generally. And the book has a quite simple and I think widely accepted model of how that works. But before we turn to that, let me just ask one question about the concept of a niche. It actually comes from Jacob. He's asking, are these niches safe? There is a sense in the book that Japan has positioned itself in such a way that its advantages are really durable in some of these activities. And that's rare in a capitalist economy. I mean, you can sustain advantages for some period of time. Why are you convinced that these positions are not vulnerable to put it bluntly, a lot of Chinese industrial policy money?
Of course, yeah. So Made in China 2025 is basically the same blueprint, right? So China has already announced they want to roll out industrial policies that would make them like the next Japan. And the reason that I'm positive on this is that the Japanese companies are not standing still, right? And so it's not as if the Japanese in their little niche and twiddling their thumbs and saying, oh, we own this niche, this is cool. Rather, there's a lot of innovation coming out of Japanese companies in these niches, and the niches are difficult to begin with. So my favorite story, I think, Steph, our favorite story here is this whole thing about the photoresist, which is a chemical that goes into semiconductor production. And Japanese companies, the three, have like 70% of the world market share, and the rest, or 90% of the world market share. The rest of 10% are actually made in China, right? And of course, the Japanese companies know that. Currently, the Japanese photoresist is far better than the Chinese photoresist, but it's not gonna take China a long time until they catch up. And so, so the Japanese reaction to this is, let's make ever better photoresist. And so, if you go into the weeds of how these things are made and what they are and what it takes to make ever better, this is actually a part. It's an advanced material that goes into semiconductor production. It's a layer that's needed for the stepper. And so the Japanese companies are going to make ever better. And it's not only patented, there's a huge tacit knowledge to that. And so the Japanese companies are not sitting still and waiting for China to arrive.
Right.
There is a whole new competitive dynamic in Asia that is, as you know, I mean, it involves Korea, it involves Taiwan, it involves, some other places now too. It's very exciting. It's highly dynamic. And so this is not some static description.
No, absolutely, absolutely. Can you talk a little bit about that Northeast Asian political economy? Because it's got wider strategic implications, again, for my constituency, people who are interested in where the regional economy, political economy, and even the grand strategy of the region is going to go. And I was really struck by the fact that, like many treatments of Japan, there's an implicit, dare I say, flying goose model, still in this book, right? With Japan occupying this particular role vis-a-vis Taiwan and Korea, which in turn occupy a particular position vis-a-vis China. If we just leave the Southeast Asia side out of this for the moment and talk about those four countries, can you describe some of your findings on how they interact?
So we shouldn't leave Southeast Asia out for long, right?
No,
because that's actually where the new action is.
But just to simplify the story. Yeah.
Let's look at Northeast Asia for starters. So what's happened over the last 10 years is that these supply chains, so I'm looking at this from the Japanese perspective, right? So if you look at the trade data from Japan's point of view, the Japan-China trade is roughly equal.
And as both sides have a current account.
Yeah, and it's not the same products, but if it's just in dollars, it's like 200 billion, and so and then but South Korea and Taiwan have a trade deficit with Japan because they need these advanced materials and production machinery and to make semiconductors and to make a variety of things. And then those two countries make the parts that then are shipped to China, and China puts this together.
And they have surpluses. And they have surpluses with China.
Yeah. And of course, there are also lots of Japanese companies in China for the Chinese market, mostly. And so if you talk to business people, the relations in Asia are actually pretty good, because there's a symbiosis where actually Chinese business needs Japanese business and Japanese business needs China. And so so if you leave the politics out, people have found some sort of equilibrium where Japan anchors the supply chain. We need Japan. Without Japan, we couldn't make these things. So, okay, let's be nice and, kind of to Japan, and Japan needs these markets to do these things. So it's actually, or at least until COVID struck, there's a resource dependency between these countries that has created a sort of a very interesting, collaborative, if not even symbiotic relationship. And so even on the Korea-Japan side, the politics are complicated and all of these things, but on the business side, there's a lot of give and take and collaboration and mutual dependency that actually has stabilized, I think, that relationship in Northeast Asia. And then the other thing I will throw in is, if you talk to young people, there is a lot of love for Japan, right? So for young Chinese, being, using Japanese cosmetics is sort of a sign that you've arrived. And the Koreans have tagged on to this. So the Korean cosmetics are also very good, but they're not quite as good as the Japanese. And then they have, on the we were talking about services earlier. On the movie side, there's this competition between Japan and Korea, and everybody agrees that the Koreans are better at romance, and the Japanese always have these complicated moral dilemmas. And so it's true, right? And so there's this saying that our former CGT fellow here at GPS, Jim Fallows, has a book where he says that, if you the farther away you are from China, the better it looks. When you get close, it's not so great. But the farther away you're from the United States, the more horrible it looks. But if you get closer, you see that there's some good stuff going on in America still. And not maybe today exactly, but you get Jim's larger point. The same is true for Asia. I mean, the farther away you are from Asia, the more important and exciting and great does China look. But as you get closer to Asia, you realize that Japan is playing a very important role, not just as an aspiration for young Asians or an anchor of the global supply chain or the Asian supply chain, but also, as you just said, as an important counterbalancing factor there, right? And so that's why Southeast Asia will be very important as we go forward.
Right.
And already Toyota and SoftBank and so forth are putting a lot of effort into wooing the Southeast Asian consumer.
Oh yeah, and just I don't want to digress on this, but there's a grand strategy piece of that, because the whole concept of the Indo-Pacific as a grand strategy was actually pioneered by Abe in his first administration, and then came back in 2012. So there is meat being put on those bones, I think. Let me shift gears a little bit and also pick up some of the interesting questions that have come through and look at this through a policy lens. This is a business book, and it should be found on airports. It's an airport business book. Someone who should pick this up, go to Japan, you want a quick look, here's an overview that's very compelling. But let me ask about the policy side of this, because obviously, everyone's heard the term Abenomics. It was met with a certain amount of skepticism, whether this was real. There are other reforms which go back to Koizumi and even before, arguably. How does policy fit in the story that you're telling in this book? First of all, writ large. And then maybe you can comment on two things in particular. One of our listeners has asked about education policy and how the Japanese system of higher education either supports this or doesn't support it adequately or could support it better. And then the other piece of this, which I just find really interesting, is corporate governance. Corporate governance reform has been a big theme in Japan for decades. Sometimes it seems like it's galloping ahead, and at other times it seems like you just can't get anything done in that space. Could you talk to both of those?
Yes. So I'm not a political scientist, so I'm a little bit out of my depth, and that's why it's so great to have you in this conversation. But Abenomics has a lot of critics. Is it all a lot of, much to do about nothing? I think that the critics overlook one thing, and that is they look at each of the Abenomics measures as if there were a single thing. When in fact, what my interpretation of what Abenomics is trying to do for Japanese business is to empower the reformers in the corporate sector. Abenomics has taken away the previous protection of the old style CEO, the risk averse sort of, muddled through zombie type leader. And it has given the imprimatur of reform to the more visionary, reform-seeking people. And so much so that the Keidanren, the big employer association, is now actually on board and no longer is resisting these reforms, right? So and they've done this in very interesting ways that maybe it would take a little bit too long to get into the weeds of here, but there's a lot of nudging and shaming. including in corporate governance. I'll get to that in a moment. But there's a lot of shaming that if you are actually an old style Japanese CEO now, you are no longer part of the club. You're no longer part of the big JPX 400 index. You're no longer, you no longer matter. And so a lot of this has been done by incentives and by celebrating and showcasing the reformers and sort of ignoring the kind of the lower, not so proactive guys. And that's been very effective. It's difficult to put metrics on that and, and say, well, this is failing or this is not. There's 2 more years on the Abenomics program. And I think by the time we draw the bottom line and say, okay, was this effective? I think it will go down as one of the more effective reform programs ever. And it will, the before and after Abe Japanese business setting will be completely different. Now, education is also undergoing this huge shift, including with employment. So I have a whole chapter on how employment is changing. And, the Japanese employment system used to be lifetime employment, where there were rights and responsibilities on both sides. So the employee would give up the rights to determine an individual career path, the location of work. It could be sent abroad, it could be come back, sent to study abroad. So the employee would give up a lot of rights, and in return, the company would have a lot of responsibilities for the education of the employee and training and so forth. And the universities were not really training that much, other than the engineering schools or the national sciences. So the young people of Japan have decided that they no longer want to give up their rights on where to work. They're no longer interested as much, or not as many of them are as interested in getting married to the company and viewing company as a family. And so job mobility, people under 30, has increased significantly. There is no longer an expectation that the young people that are now taking on a job will only work for that one company. What that means, though, is that then the employers, and Toyota-san has already gone public with this, we can no longer afford to educate. We no longer have the responsibility for education for these employees because they will leave. So we can't afford to send them to UC San Diego to study or do whatever they want to do. So universities, it's your time now. And so the university says, like, oh my goodness, what are we going to do? And right now, those of you who are following this know that there's a discussion whether we should start the school year in September to make it easier to study abroad, and maybe we should have more grant programs and government programs and university programs to broaden our educational agenda and also role in this whole thing. So that is another thing that is definitely changing in Japan, and the education system is next. Now, corporate governance is a super interesting topic. It has completely changed. Yes, again, nothing is ever fast, everything is slow, but the JPX 400 companies, so those are the largest 400 firms in Japan, on average have 3 outside directors on their board. And all of them have, 85% have a female outside director or a female director on their board. So that has changed too. Japan, in fact, in some ways now has a more advanced corporate governance system than we do, because they have introduced a sandwich reform program where there is the board reforms, where there are outside directors and new responsibilities for disclosure and sharing and, kind of having a discourse, and a stewardship code, which is basically the responsibility of the institutional investor to make sure that companies are run well on behalf of the asset owners. And the US does not have that. We have a voluntary thing, but we don't have this as a thing that everybody has to abide by. And what that means is that Japanese institutional investors, which are the ones that manage the pension funds and the wealth, which is significant, are now asked to actively participate in corporate governance. And it's maybe set up as a defense against short-term financial engineering from Wall Street. But it is also a whole new thing about finance and how finance works in Japan and what it means to be a shareholder and how asset owner interests are represented. So, Steph, if you think that the Japan's corporate governance system is not up to date, you may want to look again.
No, I didn't say that at all. I was just to the contrary. It seemed like one of the things you're emphasizing in your book is that corporate governance reform has actually pushed the process you're talking about here along quite dramatically. And obviously, we're a long way from the zombies. Which of course was a corporate governance problem in large part. Let me just, this isn't really a question, it's a statement from Yoshi, but I think it's an insightful one. Yoshi notes that the question I posed really depends on whether you're looking at the macro or the micro side. And that when you look at macroeconomic policy, Japan has made a tremendous number of mistakes that have gotten it into these periodic deflationary cycles, which he notes also affect the service sector adversely. But if you look at the micro side, you see exactly the type of thing that you're talking about, which is a more innovative environment. Now, that comment isn't necessarily positive because it suggests that unless the macro gets changed in some way, you're still could be stuck in this lower growth equilibrium than you'd like. But I think it does capture that difference between these two levels of policy where more might be going on in one sphere than in another.
Yeah, Yoshi is spot on as always, and so that's right. I'm looking at what are companies doing. There's a whole large issue about, the debt that you mentioned earlier, or how we regulate certain parts of the economy, or what decisions we make at the higher level of what are the government programs, what incentives are set, and so forth. And those are policy issues, and those are important. But I'll go back to, you may remember, Steph, 1985, Jim Baglan wrote this book, The Kaisha, the Japanese company. And he has this line in there that, trade is important and macro is important and government is important. But at the end of the day, those guys don't make things, right? Companies make things. And so let's look at what companies do. And that's what I'm trying to do in this book. I'm not saying that the business reinvention of Japan will necessarily mean that Japan's problems are all solved, right? There are all kinds of problems in every country, but Japanese companies that are at the forefront of this reinvention are interesting in their own right, and they're important for the global economy.
No, absolutely. I couldn't agree more. I want to leave some time at the end to take up the issue of how COVID affects or doesn't affect the analysis you've done. But before we do that, let me just throw out, get you to speak briefly about a sector which kind of surprised me, frankly. It was, to me, the most surprising chapter of the book, which shows my ignorance. But it's a chapter on finance. And we've touched on this, but the way I read that chapter, you seem to be saying there's much more innovation going on in the financial sector in Japan than one might think. And that even if foreign actors are dominant, the Carlyles and the BlackRocks and so on, that there's a tremendous amount of M&A activity. You've got these innovative actors like SoftBank. Of course, that took a little hit with the WeWork thing, but nonetheless, the idea that you could have a venture capital fund of that size coming out of Japan, that was sort of a shock to people. Do you want to say a few words about finance, and then maybe we can close out by talking a little bit about COVID?
Yeah, so Japan now has the second largest M&A market after the United States. And the reason is private equity. And there is a private equity bonanza in Japan right now, which is very exciting. It's necessitated by this business reinvention, right? So these companies, I mentioned Hitachi earlier, but Hitachi is no way alone out there. The companies are doing Choose and Focus version 2.0, which is no longer just getting rid of non-performing businesses or cutting off an arm here or, kind of a little superfluous business there. No. Right now, Japanese companies are pivoting away from those old businesses. We mentioned Panasonic and getting out of TVs, NECs, sort of displays, sort of, and then Hitachi selling off Hitachi Chemical, which is one of the crown jewels. That was a shocker. So, and if Hitachi can do it, then everybody can do it, right? So that took away the excuse that it's too difficult. All right, now if you want to get rid of, carve out a large business that is actually very successful and it's billions of dollars worth, the only way you can do this is selling it to private equity. And there was this maybe lucky moment where interest rates are zero. There's a lot of places where the bricks didn't work out as investments, and private equity is hungry, and Japan is selling off its crown jewels. And so suddenly you get this activity in Tokyo where the large companies are there. The Japanese, of course, never sit still, right? So there's a homegrown business now. Some of it is getting very large. Some of it is doing succession deals, of which there are also a lot. Some of them are riding the wave, and some of them are actually shaping it. And what's interesting about the private equity market is it's not like Wall Street. It's actually a much more, Japanese place where, tight culture comes in here. We talked about this earlier, where Otemachi, which is the financial part of Tokyo, is really a village, and everybody knows what everybody does, right? And so if you were entrusted with one of these crown jewels, right? And the Japanese CEOs don't want to take their crown jewels to the pawn shop, right? And so if you were entrusted with one of these crown jewels and you're like Bain or KKR or one of those players, and you abuse that trust, you will never get another deal in Tokyo. And that knowledge has led to the Japanese PE market being actually a pretty solid, honest, long-term turnaround play market. And that is very attractive to the PE players.
The foreigners have gotten Japanized rather than the Japanese firms getting international.
Even Daniel Loeb or some of these Wall Street traders, when they go to Japan, their behavior is much nicer. And so, they know if they just do this sort of vulture, short-term engineering, buy it, do a real estate play, leave it, they will not be successful in the long run in Japan. And so, and the stewardship code that I mentioned that has introduced a more important role for the institutional investors plays also into this, right? So the institutional investors are looking into this and say, we want to make sure that this is not abusive and that this actually contributes to the longevity of the company and value creation in the long run. Right. And then that adds up to this whole thing about how Japan is still a different system of capitalism. Yes, it's slow. Sometimes it's annoyingly slow. It requires a lot of patience. And, maybe these Japanese companies are overpaying on some of these M&A deals and they're overpaying on goodwill. But what they gain is a certain stability and they're cutting off the long tails of the distribution of some of these deals.
Right. Yeah. And of course, just a plug on one particular point, the question of personal income and household income inequality in the Anglo-Saxon economies in Japan. It's just a very different world. Let me close out with COVID. There are a number of questions on COVID, but I want to frame it in a very particular way. For those of you who are interested in this question, Ulrika and I had a very interesting conversation with Rich Verma about the COVID issues in East and Southeast Asia and India. And if you would like to look up that video of that webinar, it's online. But let me pose the question a little bit different way. One of the biggest policy discussions in the United States about the region has to do with decoupling with respect to China. And I think both sides of the aisle, there's this sense that the relationship with China is going to have to be fundamentally restructured looking forward. And simultaneously fundamentally restructured, but at the margin, obviously, but chipping away at companies like Huawei, at our dependence on Chinese networks. How does this bit of the post-COVID world play into your analysis? What happens if Europe and the United States look at China through a somewhat different lens?
So there's this whole how is Japan dealing with COVID, which might be some of the questions. So I have more to say about that, which I'll do at some other point in time. But you're asking about the prospects, the economic.
Well, and particularly because of the way that you set up this niche strategy as being very contingent, dependent on these flourishing, very dynamic international production networks, where a lot of politicians are looking at these and saying, should we throw some sand in it? No, it's not going to get shut down, but should we throw some sand in it?
And I'm not sure that the Asian politicians are saying that. So the IMF has this forecast where Korea will be okay and China will grow and Japan will tank this next year, and I just can't see that. I think that the Asian economies might all tank, but they might also actually recover. But these supply chains in Asia now, I think, are tying them together at the hip. And that might be a good thing, or we don't know, but we'll see. But I can't perceive of a situation where China would go back to growth and Korea would grow and Japan would not, because they need Japanese inputs to do these things that make them grow, right? And so I think that there's one scenario where the post-COVID economy, global economy, is basically run out of Asia. And if we're not careful, we might actually be locked out of that the Asian economies will start back up, and they're faster too, right? They're over this and the first wave, and they're ready to rumble. And there is, I think, a scenario where the Asian economies are going to do just fine, and the people that are being left out are the old consumer markets, whether that's old Europe or old US, and I think we need to worry about this a little bit from a geopolitical perspective as well, because so Southeast Asia will kind of go with that, and I could see the Asian century, the 21st century is supposed to be the Asian century. It might actually happen.
Yeah, well, I share these concerns because we obviously have a mixed interest with respect to the Asian recovery. The world economy needs Asia to recover, and China is going to be absolutely pivotal with that and pulling along the regional economy that surrounds China. But on the other hand, we saw in the wake of the last global financial crisis, how that, in my view, contributed to China's sense of overreach, or a kind of overreach, on the belief that the United States was entering a period of significant decline, which actually proved not to be the case. And so that whole dynamic is the other side of this, is whether this will embolden Beijing. Listen, I think we should move towards conclusion. Ulrike, this was so much fun talking with you. This is a terrific book, particularly those of you who do not work on Japan, but as well as those of you who do. It's a great way to catch up with what's going on in Japan between one covers. It has sections on the labor market we didn't get to, on women. Gender is a particular interest of JFIT, on companies' corporate culture, up and down the line, as well as great little case studies of particular firms. So congratulations on it coming out. And I think we'll adjourn, and I'll see you next week.
Well, thank you, Steph. It was really wonderful for you to do this, and it's always great to talk to you and have the privilege of spending an hour talking to you. This is really fantastic. And everybody, thanks for joining. Next week, we will have, the topic is trade, and we will have Christina Davis from Harvard University and Megumi Naoi from UC San Diego, two of the leading trade academics regarding Japan right now. And it'll be very interesting because Christina will tell us that there's still hope for things like the TPP and other things like all the trade agreements that we have, whereas Megumi will argue that those are toast. So we all look forward to seeing you again next week, and take good care and stay well. Goodbye.